Hi everyone, and welcome back to the Client Classroom. Today I want to talk about one of the biggest financial risks facing retirees, and surprisingly, it's not the stock market, it's long-term care. Now, when most people hear that, they immediately think, I probably won't need it, but the statistics tell a very different story. Depending on how you define long-term care, somewhere between half and nearly 70% of people turning 65 today will need some form of long-term care during their lifetime. So this isn't a rare event. For many families, it's something that eventually becomes part of retirement. Now, here's where people often underestimate the risk. Most conversations focus on whether you'll need care. The bigger question is, what happens if you need care for several years? Research shows that while many people who need care require it for a relatively short period of time, about 22% will need care for more than 5 years. And that's where financial plans can really begin to break down. Then there's the cost. Nationally, a private nursing home room averages around $130,000 per year. But for many of our clients here in Connecticut and Massachusetts, the numbers are much higher. Around New Haven, nursing home care can approach $190,000 per year. And in parts of Cape Cod, it's over $200,000 annually. Those numbers tend to surprise people because most articles quote the national average, but that's probably not the cost you'll actually face where you live. So naturally, people ask, should I just buy long-term care insurance? And sometimes that's part of the answer, but it's usually not the entire answer. The long-term care insurance market has changed dramatically over the last couple of decades. Years ago, there were more than 100 companies offering traditional policies. Today, there are only a handful left. And many existing policyholders have experienced significant premium increases over the years, and underwriting has become much stricter. Even if you already own a policy, it's important to understand exactly what it covers. How large is the benefit? Does it include inflation protection? How long will the benefits last? Because having a policy doesn't necessarily mean all of your long-term care expenses will be covered. That's why we encourage clients to think about long-term care planning, not just long-term care insurance. For some families, insurance makes sense. For others, it may involve setting aside dedicated investment assets. And for others, hybrid life insurance policies, state partnership programs, or other planning strategies may be more appropriate. There isn't one solution that works for everyone. The most important thing is to start planning before you need care, because the earlier you begin, the more options you generally have. Insurance is easier to qualify for, hybrid policies are typically less expensive, and if Medicaid planning eventually becomes part of the conversation, those strategies often require years of advanced planning. Waiting until care is needed dramatically limits your choices. So, when you step back and look at it, long-term care planning isn't really about predicting whether you'll need care. It's about preparing for a possibility that statistics tell us is more likely than most people think. Because retirement planning isn't just about growing your assets, it's about protecting them if life doesn't go exactly according to plan. If you'd like to review how your long-term care fits into your retirement plan or whether your current strategy is still appropriate, we're always happy to help. You can schedule a time by visiting caserta-dejong.com or by giving us a call. Thanks for being here, and we'll see you next time in the Client Classroom.